So I hopped on just a little bit earlier for you guys. Yes, so for you guys who are here, I'm wearing sunglasses because they dilated my eyes because I'm gonna get LASIK eye surgery. So I went in for pre-op and they had to do a bunch of stuff to my eyes, and the sun is just way too bright right now. Like, it just hurts. Yeah, so today I'm letting some people pop in, but I just wanted to talk about some real estate, some stocks, some business, vending machines, just ask any general questions, and just explain first off how to qualify for real estate loans. So the thing with real estate is that you're gonna need money, but that doesn't mean it has to be your own money. It could be somebody else's money, but you're gonna need money. You're gonna need to get funding one way or another. So I was gonna go into detail on how you can check yourself, like before going and talking to a lender, how you can check yourself if you would be able to qualify, and around how much you would be able to qualify for. Let me just talk about what you need to prepare for also when you go to buy a property beforehand. So one of the things that you're going to be needing to do is, you don't want to be the person that's going and talking to a lender that doesn't have anything in order. You walk in, you don't have your tax returns, you don't have your bank statements. If you can't get to those things within a day or within a couple hours because they're up in the attic somewhere, or you don't keep track of your stuff, then you're gonna miss out on so many good real estate deals because you're just not organized. And so before anything, this is something you should do today. Like when we get off of here, this is something you should start thinking about or trying to think about doing, is just getting your stuff in order. Like get your tax returns together. Here, I have a checklist I was gonna go over with you guys actually. So, okay. Home buying checklist. So you guys can buy some property. So get pay stubs, get your last 2 years tax returns. If you're self-employed, you need 2 years of your business tax returns, and they should be going up over the year, or it's gonna be kind of hard for the lender to qualify you because they're gonna ask, why is your income going down? And also if you're self-employed, because I know a lot of people in here want to be entrepreneurs, right? We're all just trying to make money. Even if you have a side hustle, that counts as a 1099, which is an independent contractor, which is self-employed. Even as a 1099 side hustle gig work, that's you being self-employed. So if you and with that you can write off stuff, right? You can write off your miles that you drive on your car. You can write off any business trips you take. You can write off maintenance on your car as a gig worker. You can write off advertisements, all that kind of stuff. But if you're buying real estate, you don't want to write off too much. So if you make $100,000 a year and you write off $90,000, well, to the bank, you only made $10K, and then you can't buy property. So sometimes it's best to just pay up your taxes just so you can qualify for property. You don't want to write off too much. But so the things that you'll need are your income, proof of your income, bank statements, pay stubs. You're going to need your tax returns. You're going to need investment and retirement accounts. So if you invest on, Webull, M1 Finance, Fidelity, they send you an account and a statement every single month. And so you're going to need a couple of those to show as just proof of your investments. Just a copy of your ID, all your basic info, your address, birthday, all that kind of stuff. Your social security card and your number, your social security number. And this is going to really help you. If you have the property that you're buying, and it's a good deal, that's going to help you tremendously, because it's not as much risk for the bank. So what does that mean? So if I'm buying a property that is $200,000, that's what it's worth on the market, and I'm buying it for, let's say, $120,000. Now these are not crazy numbers. These are things you can find off market. You're not going to find anything like that on the market, because if someone's selling it on the market on the MLS, they're going to get market value for it because they're selling it on the market. But if you find something off market that someone is selling, then you're way more likely to get a good deal like that. I mean, I had my friend Henry bought a duplex for $120,000 that was worth $220,000 and immediately rented it out. It didn't even need repairs. And there's multiple reasons people need to sell immediately like that. You know, they gotta bail someone out of jail, they had a family emergency, there's multiple reasons that people want to get out of their property quickly. And as long as you're honest and upfront, you say, hey, look, and some people just hate realtors. So if you say, hey, man, like, you know, I can offer you this much for the property. Now, if you sell it on the market, you can get way more. And if you want to sell on the market, you can get market value, and I have a realtor for you that can help you do that. And some people are just going to say, nah, I don't want to put it on the market. I hate realtors. Whatever it is. You know, some people are just not going to want to put it on the market. And so they're going to be willing to take, you know, your offer even though it's below market value. And some people, I mean, the people who are in these kind of situations, you're honest, right? You tell them, hey, you can get more for it if you put it on the market. If you don't want to, that's fine. But these people also need to have equity. So you got to be able to offer them more than they owe. So at least they're making something. You know, offering someone $50K when they owe $100K is different than offering someone $50K and they only owe 10. Because one of them has to pay you $50K to basically buy it, and that's not going to happen. And the other one is making $40K. So it's just how the situation lines up. Like, hey, you're making $40K. I'm offering you $50, but you're making $40 because you have $10K in equity. And when someone's in you know, a situation where they really need the money, then there you go. You're helping them get out of it. Or even if someone's going through a foreclosure, then someone rather sell their property to you at a discount and avoid having a foreclosure on their record where they may not be able to buy property for a while. They may not be able to buy a home. It's going to destroy their credit. It could really ruin your life, going through bankruptcy, foreclosure, any of those things. So they rather sell it to you at a discount and at least make something. Maybe they'll make 10K out of it or something, than be foreclosed on by the bank and have that on their record. And so you're helping people get out of those situations and you're getting a deal. So that was a tangent on that. It's not impossible to find deals like that. It's very possible to find deals like that, but you're not going to find them on the open market. Just on Zillow, on the MLS. Maybe once in a while you'll find a first sale by owner who is, you know, who doesn't really know the value of their house and is just wanting to sell it with a sign in the yard or something, or on Zillow. But most of the time, someone who's on Zillow is actually overinflating their price, because Zillow is, what's it called? I saw a quote that said the A in Zillow is for accuracy. And it's because there's no A in Zillow. They highly inflate the prices on Zillow. It's just not accurate, the comps. So, you know, someone's house could be worth $250 and Zillow says it's worth $315. So most of the time, these for sale by owners on Zillow who are just selling it on their own are actually selling it for way overpriced. And that's why they don't get any showings. That's why they don't get any offers on it, because it's way overpriced. Do you guys have any questions so far? Start adding them up. Would you say it's better to be a real estate agent or a signing agent? What do you mean a signing agent? Like for, like a loan officer? Like a loan officer? What do you mean? But yeah, I think it's great to be a real estate agent. If you're going to be in real estate, so the thing though is that if you're going to be a real estate investor, then it's not required to be a real estate agent. You know, you don't have to be a real estate agent to be a real estate investor. And I wouldn't get your real estate license to be a real estate investor unless you were going to actually practice real estate, unless you were going to actually go and sell and help people sell and buy property. Because it costs money to keep your license. Like, it's not like you're just going to get it and then you're not having to worry about it. No, you have to renew your license every year. It costs money to stay active and to keep your license, and you have to do continuing education. And so it's not just like you can get it and then forget about it. You're gonna need it costs money to maintain that. And so unless you're gonna be actually practicing real estate, then I probably wouldn't get it if you're gonna be a real estate investor. Now, the benefits of getting it and practicing real estate are that you get to network with a lot of investors. You get to meet a lot of other agents who also know a lot of other investors. You just get to that's how so I'm always saying network. I've made so much money just from networking and having connections, because if you know other extremely successful people, they love young people who are wanting to hustle and have the drive and are like willing to learn. I mean, I've met tons of multimillionaires, and it's all because I'm a real estate agent. That's like how I've met most of these people, and they've like helped change my life. And I did that, just being an agent. So that's probably one of the only reasons I would just practice real estate. But also, being a real estate agent is a career that allows you the freedom to actually go and invest and deal with your investments. I can get up and go whenever I want and deal with my properties and stuff. I can answer phone calls whenever I want. I'm very, very flexible, and a lot of other careers may not allow you to be as flexible and focus on your real estate investing as much. So let me go up. Let's see what other questions we got. I hope that helps though. Do you know what I need for a business credit card and how it works? Yeah, get an LLC established, go to the bank. You're gonna need an operating agreement, which comes with your LLC. Sometimes you need DUNS and Bradstreet number. So I would look that up, Dun and Bradstreet. But yeah, you get an LLC formed so you can create a business bank account, and then you can apply with your EIN or social through the bank once you have your LLC formed and have it like all official as a business. Should I get a degree in finance or accounting? I mean, you don't really need a degree in finance or accounting for real estate. I think the best way to learn is to just go out and do it. You don't need a degree in anything to go out and buy real estate. If you have good credit, you have income, or a co-signer, you can go buy real estate right now. I mean, I've had other people who actually, are finance majors, have their degree in finance, and it really doesn't make a difference. I have people who don't. So, how do I find a good CPA in Austin, Texas? I would just interview people. If you start networking with people, then, I've met a lot of investors as an agent, go to networking events. I'm going to FinCon in Texas, and I'm going to the BP Con 2021 in New Orleans, where I'm going to meet a bunch of extremely successful real estate investors. And this is where I network. I meet other investors, and I'm going to ask them, who's your CPA? And they're going to tell me. So then I call them up, and that's how I went to get an LLC filed. And because I knew other multimillionaires, I knew extremely successful people, I said, hey, I'm trying to get this LLC done ASAP. And one of the people I knew, he said, I have a really good attorney for you, and I'm gonna call him and tell him that you're someone that I work with really closely, and that you're gonna bring in repeat business. So let me call him, and then you can shoot him a call, and I can connect you guys together. Got my LLC filed within 4 days. If I didn't have that connection, I don't know how long it would have took, probably longer than 4 days. But because I had that connection, then it worked out. How to approach the first triplex. I always think, for me, when I run my numbers on properties, you should always run it including your management fees, because you're not gonna manage your properties forever. When you start, you probably are. You're probably gonna manage your own property because you just have one. But in the long term, eventually you're going to be owning a ton of property, and you don't want to manage all those properties. Like, you're not going to have the time at that point, or even want to. So it would suck if you ran all these deals based on not having the because that's going to be an extra 8%. So if you ran all these deals based on not having the management, and all of a sudden once you want to get management, they're no longer profitable. So I would run deals, and I use the Bigger Pockets calculator on the Bigger Pockets website to run deals. So that's something I would do ASAP, is just run a bunch of deals so you can learn how to do it. What's a good way to practice the state exam? I listen to a lot of Prep Agent. So that's something I watched on YouTube, Prep Agent, and that really, really helped me. Mobile signing agent. Yeah, try it. I say try everything. Get your real estate license. I think it's actually faster to become a mobile signing agent. So if you want to be a mobile signing agent, because you can do that faster, then go for it, but just pick something and go 100%. You can make money either way, but you have to pick something and just go all in and focus on it, because then you're going to be half-assing multiple things, and everything's just going to go, everything's just going to go plop. Nothing's going to come out of it, because everything is getting 10%. So you talked about finding good deals off market. How do you do that? It's dark with the glasses on, but like my eye, I had to peek a little bit. You talked about finding a good deal. So how do you do that? There's multiple different ways. So driving for dollars. You can I want to make videos on this too, is where I go driving for dollars, but you can drive around and look for distressed properties. So properties where they haven't trimmed the grass in a while. There's dings on the garage door. They don't have dual pane windows. They have outdated windows. The roof looks a little bit old. Properties like that. And then call up title companies, do a skip trace on the property to find the owner's address, not the address, you're in front of the address, the number, email, their name, and then call them up. Say, hey, I'm a local investor. Have you thought about selling this property? And so, a lot of the time they have, because it's in distress. They can't upkeep the property. They can't take care of it. So you're looking for opportunity around in these distressed areas. Maybe they need to sell it, but sometimes people are just like, yeah, like I am looking to sell it. Another way is to go on PropStream, go on Deal Machine, and download a list of absentee owners. People, maybe there's landlords who haven't rented these properties in a while. These properties are just sitting there vacant. Maybe they're tired of being landlords. Maybe they want to retire and they want to just get rid of all their property. Some of those people are willing to sell them to you at a deal. If you just got to call them up. Call them up and see. There's no harm in checking. But that's once you get a list of owners that are absentee owners like that, because you can get a list of vacant properties. You skip trace, which is where you just get their phone number and their name. Call them up, say, hey, I'm a local investor. I saw your property on so-and-so street. Have you ever considered selling it? And they're probably going to say, well, what are you offering? You can say, well, I haven't seen the property, so I can't give you an exact offer, but what is like the condition of the property? And just asking general questions about it, and maybe you can give them a range. So I haven't seen it. Just without seeing it, I can probably offer around. And before you call them, you ran your numbers. And that's something else to learn, is just how to run numbers. And again, I use the Bigger Pockets calculator. I have the pro membership on Bigger Pockets website, so I can run unlimited deals. But without it, I think you can do 4 deals. And I would just pick random houses on Zillow to practice. And I'll probably make videos showing you guys, like me on the website, exactly how I do it, so you guys can, have an easier time doing it. I have $25K. What can I do with it to invest? In some areas, $25K is enough to buy a property. In my area, it is. So if in your area $25K is enough to get yourself a property, closing costs and everything, then I'd look for a duplex. I would live in, $25K, if it's under $200K, that would be at least 15%. So if you can find one and rent it out right off the get-go, that'd probably be best. If you can't, then I would put 3.5% down, live in one side, rent out the other. And if you can't find a duplex, because duplexes are harder to find, it's going to take a little bit more work. It's going to be harder. There's always going to be at least one duplex in your whole area, at least one, but they're really hard to find. They're extremely hard to find, but it'll just take more work, more patience. If you don't want to do that, then I would get a single family home, live in it for a year, then repeat the process the next year. Buy another one, live in it for a year, buy another one, live in it for a year for 3.5% down. Because I'm pretty sure you can have, first time home buyer loan, FHA, and then you can have a conventional, which is 5%. But this is if you live in it. So the only way to get low money down is if you're living in the property. Otherwise, you put 15 to 25% down. So living in the property is a really good way to get a good cash flow, because you put so little, not a good cash flow, but to build up a big real estate portfolio, really quickly. You could have $1 million worth of real estate within 5 years by just living in it, selling it, buying another one, not selling it, living in it, buying another one, living in it, renting it, buying another one, year over year. Do you have to get a realtor involved when we find off-market deals? No, not necessarily. I would, because, or that's also another reason to get your real estate license, because maybe you don't know how to do the contracts, That's the point of that's the point of getting a realtor, is that they do all the work for you. They do all the contracts that a lot of people don't know how to do. Now I do, because I'm a real estate agent, right? But otherwise, or an attorney, you can get an attorney to do the contracts for you too. And it's still going to cost money, but that's something you have to be willing to to pay when you're finding a deal, because when you're finding a deal, you're trying to get a good deal. So you're trying to make this as easy as possible for the other person. So you're going to say, hey, I'll pay all realtor fees. I'm going to pay all attorney fees. I'm going to pay the closing cost. I'm not going to ask for any repairs. I'm going to pay for it as it is. You're making it as easy as possible. And if after you do all those things, it's still a good deal, then you're solid. You know, but you have to account for that. When you're wondering if this property is a good deal, you got to think, okay, I'm going to also pay closing costs. I'm not getting any repairs, so I have to make sure it's worth buying and do the numbers, get a contractor, figure out how much these repairs are going to be to make it rentable, to make it, to get higher rents on it potentially. So, yeah, I mean, yeah, use a realtor. But account for that cost when you're giving them an offer. Just account for the cost, so you don't got to worry about it. Is wholesaling a good way to pay? Yeah, so I'm not a big fan of wholesaling because it's really lucrative. You can make a lot of money with wholesaling, but everything is hard. You know, the one thing I don't like about it is that it can be illegal in a lot of states. A lot of people don't, and I'm sure if you get mentored by someone in wholesaling, you know, who does it very, very well, then yeah, you're gonna learn this. But if you're just watching like videos on YouTube, most people don't talk about it. Wholesaling can be illegal in a lot of states if you practice it a certain way. So I've talked about this before. If you're wholesaling a property in some states, you need to show that you had intent and ability to purchase the property from the get-go. And let's say that you're trying to wholesale a deal for $100,000. You say, hey, I'm going to buy it for $100,000, but you're really not. You're going to be assigning it to somebody else for $120,000 or something, because that's your wholesale fee. Well, the bank can find you out and say, hey, so do you really have the intent to buy this property? And you could say yes all day till you're blue in the face, but ultimately you don't have $100,000 in your account. So how can you say that you had intent when you don't even have the ability to buy? Because most wholesalers, you're wholesaling because you're trying to make more money. You know, otherwise you would probably go and buy the properties. You would buy the deals yourself, right? Because that's where you make the most money, is actually buying the deals. So if the bank finds out that, hey, how can you have intent when you don't have the ability? That could be a $5,000 fee right there. So I would just look into it more. You can make money. You know, you can make money in anything if you really focus on it and you just go 100 focus on it. But it wouldn't be my first choice. Now, buying deals from wholesalers, if you can build connections with other wholesalers and you can raise your capital so you can buy deals all day. If a wholesaler can bring me good deals, then I may purchase it. That's awesome, you know? Does FHA loan apply on a triplex? Yes, it does. You have to live in one of the properties. If you live in one of the properties, you can use it on a triplex. What's the main focus of your TikTok? I don't want to ask a question off topic. I'm all about real estate, business, stocks, general Q&A. I'm young, so you can ask me anything about me being young. You can ask me whatever. Don't worry about it. Don't even worry about it. Can you get an LLC for multiple rental properties? Yes. So if you're getting an LLC for your rental, you want to be protected. You want liability protection. You want your assets to be protected. So when I put a property in an LLC, and that's something that if someone tries to sue me, they can't get my personal assets. They can only get whatever's in that LLC. And so why would I want to put all my properties in one basket? Because then I have the potential of losing all of them. Now, the likelihood of you getting sued probably isn't that high, but you never know. So a lot of investors actually put a different LLC per house, per property, so they don't have to worry about it. You know, but when you start building up so many, maybe it's okay to put 2 or 3 per LLC. You can put all of them in there, but then you're putting yourself up to more risk. You know, and that's like the point of having an LLC, is so you don't have to, you can be protected and not have all that risk, you know? I have $10K sitting in the bank. What do you recommend I do? Have you started investing in stocks? You know, I think that while you're educating and learning about real estate, because real estate, 90% of millionaires are through real estate. So real estate's going to make you more money. But it's a easier barrier, there's a smaller barrier to entry when it comes to stocks. So maybe starting with stocks, will you get very educated in real estate is the way to go. That's what I did. I invested heavily into stocks and just nothing risky. You know, I invest in things that I don't see going bankrupt anytime soon. Apple, Tesla, Amazon, Google, stocks like that. I mean, I don't see them going bankrupt anytime soon, so I feel safe putting my money there. And it grew. I sold it and then bought real estate. Well, because I was learning the whole time. So that I think that's probably the easiest way to get started, is just start with stocks, because you can finance Webull right now and buy stocks right now. You know, so, and you can't necessarily do that with real estate. You know, you need credit, you need income, you need all kinds of stuff. So it's going to be a little bit harder with real estate. But let me get back to this real quick so you guys can go over how to qualify for a property. So I went over the things that you need to have. You're going to need to have employment history, pay stubs, copy of your ID, all those kind of things, 2 years tax returns. And I wanted to teach you guys a higher level thing called debt to income ratio. So let me bring out the calculator. So when you're going to go qualify for a property, something that banks look at is called your DTI, debt to income ratio. And banks only let you use, and this is usually at a high, up to 43% of your income to qualify for property, or to have debt for properties, or any other debts. So let me give you guys an example. So let's say you make $3,000 a month. Well, 43% of $3,000 is $1,290. So you have $1,290 available for debts, like a mortgage or a car payment or anything like that, to use. Otherwise, you're considered risky. If you're above that, you're considered extremely high risk, probably not going to get approved. So let's say you have a $300 car payment. Well, that brings you down to $990 you have available. Let's say after all your minimum payments on your credit cards is $200. Now you only have $790 available to purchase a property. And I'm sure it's going to be really hard to find a mortgage for $790 a month, you know? And this is based on reoccurring monthly payments. So let's say you have a loan out on some furniture and it's $100 a month. Well, now you're at $690 a month. So you want to keep your monthly reoccurring payments very low. That's why I pay off my credit cards every single month. I don't have any reoccurring payments on my credit cards. I put a lot down on my car so I wouldn't have a large payment on it every month to take out of my DTI. So that kind of thing. So, I mean, let's do it with a different number. Let's do it with, let's say you make $5,000 a month. So I'm just going to keep giving examples. Then you have $2,150 available. And maybe that's all you have. You know, you only have, and this is debt. This is things that go on your credit. Things that are affecting your credit kind of debt. So let's say all you have is your $300 car payment. Well, you have $1,850 available for a mortgage. And you're not seen as risky. Some people, they already have if they're making $3,000 per month times, some people already have their DTI completely maxed out just with other things. You know, some people are already at 49% just with their car payment and their credit cards, and with their furniture being financed and all these monthly payments, they're already maxed out. And so when they go to the lender's like, hey, like, you don't have any room for us to lend you money. There's no room in your DTI for us to lend you money unless we take a ginormous risk, which they're not going to do. So, and so that's something you gotta consider. And when you're going to talk to a lender, this is why I was mentioning the things that you need. Ooh, let's see, home buying checklist. This is why I was mentioning these things that you need when you're gonna go buy a property, because you want to increase your odds as much as possible that you will qualify for that property. So you go in there and you're gonna be a professional. All right, they're gonna say, you're gonna walk in and say, hey, look, I'm trying to qualify for a property. I'm a real estate investor. You know, don't go in there, oh, I'm trying to buy my first property. I want to be a real estate investor. They're just gonna say, okay, well, we're gonna need this, and this, and it makes them nervous because you're someone new. They don't even know if you know what you're doing. But if you go in there with all your stuff and you have a folder here, hey, you need my tax returns? I got it. Oh, you need a copy of my ID? I got it. Oh, you need my here you go. Oh, you need my brokerage statements from M1 Webull, my brokerage statements. Here you go. Oh, my social. Here you go. My social security card. And then they're gonna say, oh, do you know what property you're buying? Yep. Here you go. Here's how much it's gonna make me per month. I already ran the numbers. I ran the comps, and you're gonna be in there like a professional. For me, I haven't even bought that much property, but the lender thought I owned millions. Like, the lender thought that I was already owning, because I came in there with a folder. I had all my eggs in order. I had everything ready to go, and I got qualified easily because I went in there like a professional. I mean, you couldn't even guess that I don't own like 20 units of property already, you know. And I will, but I'm only 21. You know, I'm ramping up. But that's the thing. So I mean, I'm living proof that you can go in there and you know, get it done. And I also told him to use my projected rents to qualify me. So the duplex that I'm buying is going to be around $200,000, and my projected rents came out to $1,000 per side per month. So that comes out to $2,000 per month times 12. So that's $24,000 a year. And I had this all written out in a plan. I told him, so I want to use my projected rents to qualify me. Here are the comps that support that the neighboring duplexes around it also rent for $900 a month to $1,200 a month. So I put it at $800 to $1,200. So I put it at $1,000 to be safe. Here are the comps that support that. Because they're gonna run the comps anyways. But if you come in there and you already ran your numbers, you're like, here you go, here's what I can do to support that, here's my proof, and it's showing $24,000 a month, but I know you can only use 75% of that, because the other 25% is allotted for maintenance or ongoing maintenance and potential vacancy. So that adds $18,000 to my income per year. So all of a sudden, because my projected rents add $18,000, imagine what that does to my DTI, my debt to income ratio. It just made it even lower. Makes it easier to qualify for a property. So I hope that helps. You guys comment if that's something you didn't know, if you're learning something. Let me go over some more questions. Let's see. Do you do mentoring? I'm 17. I want to learn real estate. I don't do like long-term mentoring, but I do have one-on-one coaching. So if any of you guys want to go to the link in my bio, you can schedule a one-on-one call and we can talk about your situation and see what we can do. Look, I also made this cute little printout. Subscribe to the YouTube channel. That's my YouTube channel. It's just my name, Brianna Nava. And I have more content on there about the new construction property I'm building and other adventures I'm doing with money. So that's something I would check out. You know, I was gonna do Turo, rent out my car on Turo. That's another thing I want to try, and I'll try it for you guys so you guys can learn from my mistakes along the way. I'm gonna risk my money, and I know I'm gonna make mistakes, because when you start anything, you're gonna lose money. You're probably gonna make mistakes. You need to expect that. You need to expect that when you're getting into a new venture, you're not gonna be perfect. You know, you're not gonna hit. If you do, then that's awesome, right? If you hit a home run and you do amazing, that's awesome. But most likely it's not going to go that way. You're probably going to lose some money. You're going to have to, you know, use a lot of your time. But you got to expect that. You know, that's how you learn. That's how you learn. I've lost so much money, guys. You guys, so you can avoid my mistakes. You can avoid all my mistakes and probably make less. What are your best locations to buy a duplex or triplex? I mean, I haven't studied other areas other than Arkansas, you know, because I live here. This is where I'm going to be. This is where I'm buying them. So you can find deals everywhere. Trust me. I bet there's one person in your area who's flipping property, who owns property, who owns a rental. There's at least one person. And if there's one person there, you know it's possible. There's deals there. There's deals everywhere. You just have to be willing to do the work to find them. You know, you're not just going to go on Google or duplexes for sale and find it. You know, it just takes a lot more work than that. Let's see what else we got. What other questions do you got? how do taxes work on the homes that you are renting? So, if you own real estate, you shouldn't be paying any kinds of taxes. There's a lot of loopholes you can make to not have to pay any taxes legally, and it's completely legal. Investors are highly incentivized when it comes. That's why real estate makes you so much money. You have so many tax deductions. You have so many benefits when it comes to that. If you don't want to pay taxes legally, then like you can make it so you don't, because you have so many. You can renovate the whole property, and that's all deducted. You know, that's all deducted from your income. And that counts as income, right? That your rental income counts as income, but it's taxed way less than you working a regular W-2 job or being self-employed. So it is coming in as income, but it's just taxed a lot less than the other tax rates. So you're getting a benefit there, and you're also able to deduct. You can deduct the interest that you're paying on the property. You can deduct any renovations, any fees you have to pay for, like QuickBooks, because you have a business or an accounting or an attorney. You can deduct all that and, you know, get your net down to zero, so you'll pay no taxes. And that's just a benefit of having real estate. So there's so many benefits to starting real estate. Yes, you motivate me to take risks. You got to take risks. You got to take risks. You got to get out of your comfort zone. You can't just sit cozy and nothing's just going to fall into your lap. You know, you're going to have to risk some money. You're going to have to risk your money or your time or both, you know? So you can't just, things aren't just going to come to you. You know, it's going to take active effort. That's how you learn. You may make bad deals. Okay? That's how you learn. That's how you learn what not to do. So you can't expect to be perfect. You're never going to be perfect. You have to go into it knowing that not everything's going to go right. You know, not everything's going to always go right. Any tips on vending machine business? Yeah, so you have your LLC, so I'm sure you have your brand name. I would get so professional. I would get a website done. I'd get all my merch. I'd get my logo everywhere. I'd get it on the side of my car. I'm gonna go on Google Businesses so I can show up on Google as a professional business. I'm gonna start door knocking. I'm gonna start cold calling. I'm gonna join all the Weeb. This is a hack. Go to the We Buy Facebook groups. All right, and just put your vending machine up there. And trust me, some people are gonna reach out. That's a big lead source. It's just going on those join Facebook groups and just post your stuff on there and put free vending machine, because it is free for you, or it is free to them. I mean, so it's money to put your vending machine there, but to them you advertise it as, hey, this is a free service. I'm providing you with vending and snacks and drinks for free. You know, even though you just spent thousands, you know, to formulate your business and everything, but that's why you get all the profit. You know, that's why you don't pay any commission. You get all the profit. How long have you been a real estate agent? I've been a real estate agent for 2 years now. 2 years now. And money ranges. Again, it's feast or famine. Feast or famine. You're either starving 1 month or you're just balling out 1 month. That's how it is with business, though. It's gonna your fluctuations are gonna be so crazy, and you have to be prepared for that. That's why they say that when you're becoming a real estate agent, you need to have some emergency savings. I didn't make money for the first 6 months. $0. I was door dashing. I was donating plasma. I was flipping items online. I was just trying to survive. I made $0 my first 6 months in real estate because it's really hard to get started. Where are you located? I'm in Northwest Arkansas. I'm in Northwest Arkansas. You inspire me to take the leap. I'm starting now. Yes, start. The issue is that people just sit there and analyze and try to plan for everything that could go wrong. I need to prepare for this. You're never gonna be able to account for every little thing. Never. So you might as well just start and figure it out. You're gonna figure it out. I mean, it's not like what, you run into a roadblock and you're just gonna, oh, I'm done. No, you're gonna figure it out. If you want it bad enough, you'll figure it out as it comes, but you're not even giving yourself the opportunity to figure it out if you don't just start. That's what people do. They have so much potential to do so many things, but you never start. That's the problem. And if you're waiting for you to be ready to start, you'll never be ready. There's never going to be a perfect moment to start. The perfect moment is right now. Right now, in a world of uncertainty and a world of you're going to make mistakes and where you don't know how it's going to go, is the perfect time to start, because you don't know until you know, right? So you just need to start. No matter what situation you're in, you just need to start now. And you'll trust me, you will figure it out. Again, I've lost money. I spent money on courses before. I see value in courses myself. I spent money on other people's courses because everything I'm saying, everything I tell you, you can find it for free on YouTube University. You can find it for free all over the internet, right? Everything anybody tells you is available online. But when you pay for a course, or you pay for one-on-one training, or you pay for direction like that, you're saving yourself maybe weeks and months of your own time of wandering around trying to figure out what to do, where to go, find this piece of information, and sometimes you don't even know what to ask. Sometimes you're like, okay, well, I want to start this, but what does that mean? What does this mean? I don't know. You don't even know where to start. So for me starting out, I paid for courses, and I'm honest about that. I paid for courses and I did them, and because I did that, I've made thousands of dollars off of paying for hundreds of dollars for courses. Getting one-on-one coaching, having someone guide you, instead of applying all these random things, having someone one-on-one coach you provides exactly what you need to do. You in your specific situation need to do what you need to read, what is going to best apply for your situation, what podcast you need to listen to, all that stuff, because it's personalized to you and it's going to just accelerate how quickly you get somewhere. But that's my personal opinion. So, I mean, it's definitely helped me, so I'll shout out Meet Kevin. I love Meet Kevin. He has some great courses. I think I have all his courses. And you just YouTubers. I love Meet Kevin. I love Graham Stephan. I love Chandler David Smith. Biaheza's great. Young lad like myself. I'm 51. Is it too late for me to invest? No, it's not. No, it's not. Now, the thing is, when you're older, so when you're younger, you have the ability to take more risk, right? Because you have time on your side. And when you're older, I mean, at 51 too, not that you don't, I mean, you still have a lot of time. I mean, don't think you don't have a lot of time. You have time. It's just obviously not as much as when you're super young, right? But there's still time there. You just have to calculate your risk based on how much time you have. So you don't have as much time to make super risky trades. Now, I'm not even super risky, but I know that I can be a little bit more risky because of that. So you're not too old to invest. I would just play it safe. You can still get a great return over the next 10 years. And then you could cash out if you would like. And make 10, man, I wish I could, you know what? Let me pull up the investment calculator and I'm going to tell you how much, or let's do 15 years. Let's do 15 years and see what it would come out to. And at an 8, so on average, the market will give you, if you just play it safe, the market will give you 6 to, I mean, even 15%. I've had way higher than 15% returns because, again, I played it a little bit more risky. So you have the opportunity for really high. I mean, I've had over 100% returns, but I risked. I could have lost it all or gained it all. So, but sometimes you don't have the ability to make that risk. So let's say you start with $0, and over the next 15 years, at an 8% rate, or let's do 10. Because if you're a decent investor, you can do 10. And you invest $30 per day, just $30 a day, and let's see, at the end of the 15 years, you would have $400,000 in 15 years. $400,000, you invested $30 a day. There you go. So I hope that helps, and that lets you know that even if you start now and just do it for the next 15 years, $400,000 is what you can have. Where do you live? I'm in Arkansas. Where do I find one-on-one coaching? It's in my bio. You can book a call with me in the bio, and there's some one-on-one coaching there. I don't know where to start. Start getting your eggs in order. Get your tax returns. Get your income up. Apply to jobs even if you think you're not qualified. Apply to them. My friend right out of high school got a $50,000 a year job just because he applied. Wasn't even qualified for it. Got it. He interviewed at like 10 different positions. He got this job. There you go. Just because he applied anyways. Get your income up. Get all your stuff organized. Just start reading. Read a lot of books. Do a lot of education. But take action. So if you can't start with real estate, at least while you're educating yourself on real estate, start with stocks. You can do that today. You can sign up for an account right now and go invest right after you get off of here. Immediately. So if you don't know where to start, throw some money in the stock market. I have a link in the bio to my investment portfolio on M1 Finance, and you can invest in literally the exact thing I'm investing in if you would like. I have a link where it's public information. You can see exactly what I'm investing on. On average, the market is 6 to 8% return. Yeah, but that's really like I'm telling you, that's really low. Like all my friends have made well over 15%. It's if you just invest in like the S&P 500, yeah, right. But if you invest in like individual companies like Apple, Tesla, Amazon, Google, way higher than that. Trust me, you can get 10 to 15%. What do you think of Airbnb arbitrage? I mean, it's fine. Again, you can make money in so many different ways. You can make money as long as you stick to it and focus. Run with it. Pick something and run with it. Pick a strategy and run with it. Go 100%. Don't half-ass it. And you'll get some results. I like the book, I Will Teach You to Be Rich. I recommend reading that. I Will Teach You to Be Rich. How do I start investment in stocks? I have a full YouTube video on it. How to start. There it goes. I printed it out. Stock market for beginners on my YouTube channel. I would check that out. I have a full video on it. And I have an ebook in my bio on how to get started also. I have a full book that I wrote on how to start investing in the stock market, the safest way and the consistent way to grow your wealth. The non-stressed, almost risk-free way to grow your wealth consistently. So I have that on my channel, and I have an ebook. I love Investopedia. So yeah, that's a great resource. Investopedia. You can look up a bunch of stuff on there and learn so many things about investing just from Investopedia. All right, so I always go over. I can't help myself. I just have so much to say. I always go over, but I'm probably going to give it another couple minutes. So you guys start loading up. If you have any more questions, you guys start loading them up right now. I'll probably only be here for a couple more minutes. I'm always going over. I'm already 15 minutes over, so I'm sorry about that. But you guys who are here, I know you guys are serious. All right, because you guys are here an extra 15 minutes over. What do you think of starting an Airbnb? I think an Airbnb is great. I think it has a little bit more. I mean, you have to pay for like the furnishings and all that stuff, of course. I mean, you have to pay for like the consistent cleaning. I think it's a lot more maintenance, but it can be good. It can be good money. Airbnb is all about location, location, location. Airbnb is location, location, location. So if you have a good location that will do better as an Airbnb rather than a rental, go for it. Heck yeah. I'm a fan of Airbnb. I think you can make money with Airbnb as well. Again, you can make money with anything. Pick a strategy and run. Pick a strategy and run with it, and go 100% all into that strategy if you're gonna do it. And I guarantee you will make money if you do that. What do you think of NEO stock? I like NEO stock. I'm not like, a big ginormous fan. That's my number one stock, but I like NEO stock. I prefer Tesla stock. But yeah, I'm not a NEO hater. It's one of the stocks I have. Simulators will give you play money. Yeah, I mean, you can do paper trading. So you can go on Webull and you can do paper trading on there. So there's a feature where you can just play trade. You can add $100,000 to your paper trading account and just fake trade just to practice. But I don't really think you have to do that, because my investment strategy is so basic, so safe in long term that like you're not going to be trading every day. You're not going to be buying and selling all the time like that. So for me, I like to be safe and get wealthy for a fact than be super risky and maybe get wealthy. You know, because then I'm gonna have to be looking at my phone constantly. I'm gonna be stressed out. I just don't have time for that. You know? You put your family on all the time. My dad's a builder. You know, my dad loves real estate too. Of course I put my family on. My dad wasn't even that big on real estate investing. He just likes to build houses and do like construction work. But now he is. I'd rather gamble. Go ahead and gamble. I don't like gambling because I don't need to risk my money like that. I just don't need to risk it. I'd rather get wealthy, almost guaranteed, than potentially not, even if it's a little bit slower. Where can I get your book? It's in my bio. Go to the link. Once I get off of here, go to the link in my bio and you can get my book on there. Some people might want to do day trading. So my issue with day trading is that, and again, you can do it. I mean, I have friends who do day trading, make money, but long-term, my strategy, long-term investors are statistically proven to make more money than day traders over the long term. And it's because day traders get a ginormous tax bill because you're trading day by day, right? So, I mean, long-term investors, you can pay as low as 0% in taxes. Well, day traders, you know, you're going to pay way more than that in taxes. And I'd rather keep most of my money rather than give it away to the government. So that's why. I mean, you're paying so much taxes, and it's already been, like, it's been shown several times that long-term investors statistically make more in the long game than day traders. You know, it's just everyone's obsessed with the get rich quick, get money now. But you guys need to stop thinking like that. It's called delayed gratification. You know, would you rather have the thing you want now, but it's only like 50% good? Like, let's say you want to own a sports car or something. Just something like super basic like that. Right? And right now I can get a used, like, with 200,000 miles of that sports car right now. That's what I can get. And I'll be happy with it. Or I can get what I really want, which is I want the new one with, you know, like, I want the brand new one that's pimped out with rims, all that stuff, if I just wait a couple years. So it's like you can do it now and get like the half-assed version of what you want, or you can delay your gratification and sacrifice and work hard now so you can get the thing you actually want in a couple years. You got to delay gratification. You know, it's not, this is a marathon, not a sprint. You're going to be extremely disappointed if you think, you know, it's a sprint. So you just got to get you got to get yourself in check, you know? How hard is it to get your real estate license? I mean, you got to take your classes, and the test is a little bit hard, but getting through the classes isn't that hard. So I took the test 3 times. I took the real estate test 3 times and I failed it. And then I watched a bunch of Prep Agent, PREP space AGENT on YouTube, and then I passed it. So Prep Agent is something I highly recommend if you're trying to get your real estate license. Is the market shifting or slowing down? I don't see the market like crashing like 2008 or anything, but once it goes up, the market will simultaneously level out. I don't think it's gonna go plop, but it will level out. And then prices, but then again, I mean, the way I see it is that, okay, if I buy a property now, I'm buying it at a really high price, but I'm getting an extremely low rate. And then if I buy a property when the rates are high and the price is really low, you see how this is the exact same thing? I'm paying the same price. It's just on one I'm paying a high rate, and on one I'm paying a high price. So it almost evens out. You know, that's why I'm saying that, like, over the long term, just buy real estate. Don't worry about it. Just buy real estate and it'll make you money if you hold long enough. I hope this was helpful and that you guys learned something.